Hello, this is Thor Young with Bear Bull Traders, and I'd like to do a recap for you on my WFC trade. I actually did two trades on WFC. One did not work, got stopped out, and the other one worked beautifully. I wanted to show you kind of what I was thinking on each one and how everything progressed. WFC here was in our watch list from the beginning of the day and was doing quite a bit of movement throughout the day. I had a particular eye on it because WFC did this move here. Pre-market, we had this high here, and then it came down and did a double bottom, pretty classic, and came back up here to test high of day. When it tested high of day, it actually hit twice to the penny at 46.97, so I got really interested in it for a continuation. Generically, when I use my triangle trade, I'm normally looking for 3-4 plus touches, but I got a little anxious on this one and got in a little bit early. Actually broke my rules a little bit and got stopped out because of it. What I was really looking was for it to come back up here and touch again so that I could get some kind of a triangle break on it. But unfortunately, that's not what happened. I did not have my third touch because I was out of rules, and it came through here and it actually stopped me out. For a small loss. I was running a 10-cent loss on that, and because of the nature of the trade, I only took 250 shares because I had a 10-cent, at least a 10-cent loss to worry about, plus slippage if it went against me. So I went pretty soft into that one. So I got stopped out of it, and once I was stopped out, I really kind of took a breath and sat back to look at it and see what's going on here, and refocused, and then I just kind of waited. I noticed we kind of had these lines here that were showing some indication of strength, and I really wanted to see if it was going to come up here and touch my 46.97 again, and if it did, I was going to be looking for a continuation back up to the upside. But if it failed, then I was going to be looking at it more as a double top or maybe even a head and shoulders pattern. So it looked at it, waited, it came up, and I saw it, and then it did not make it. It got to 46.96. So when I stress my what I've called my wedge pattern, or what's actually a triangle pattern, one thing I stress with all of these is that it needs to be to the penny. And this is why. The difference between it having momentum to go to the top side and it failing can sometimes only be a penny. I didn't get my third touch to the penny here, so it failed. I got punished for it. If I had taken another long entry based upon, some of these indicators of strength and not waited to see what was going to happen, I could have possibly been stopped out again. So I really want to just kind of see what's going on. And what happened here is basically we ended up with a head and shoulders pattern. So this failure is what makes that pattern start to emerge. So now when you're looking at a head and shoulders or my triangle, basically what you're looking for is a neckline. And my strategy that I use now, for clarification, what I'm going to call it is the neckline breakout strategy. And I'm going to do a much more in-depth review of that strategy because it works on top of multiple patterns, ABCD patterns, head and shoulders like this one, double tops, double bottoms, the inverses of those. So what you're looking at here is the WFC. We have a shoulder here, we have a head here, we have a shoulder here, and then the failure. So now what I do, and when you're looking at a head and shoulders, is what you're looking for is you're looking for the neckline. And if you can imagine, you've got a head, you got shoulders, and you got your neck. So if you look here, when it failed off, it came down and it actually touched this 46.78 level a few times. And then if you keep going across here, you'll notice that when it starts to fail, it comes down, and to the penny, it hits 46.78. So now I've got multiple touches. I count this as one touch because it could have been on the open and close of this candle. I count this as a second touch, and I've got my third touch to 46.78. So now that I have my third touch and my pattern is intact, I go ahead and I take my entry. Now, the difference on this one is I have a much stronger pattern to work with and much better entry indicators. So let me zoom in here. So you see here now, I get my touch, it pulls back up, curls under the average, and I take my entry here at 46.83. My exit is just the break of this pattern. So what is the pattern? Well, now that we know that this is a head and shoulders, if you look at my neckline here, all right, now let me draw my pattern over the top of it. Here's my descending triangle on top of this neckline. All right, so this is what I'm looking for. I've got the head, shoulders, neckline coming through here, and I've got this triangle to give me an indicator of when I need to get in. So that's my touch. I take my entry. My stop out is just going to be the break of this area right here. So you're only talking about a 3 to 4 cent stop now. Now that I only have a 3 to 4 cent stop, instead of taking 250 shares, guess what I'm doing? I'm taking 1,000. All right, I actually took 1,200 on this one. I was feeling really good about it, and I really thought I was going to get a strong move because of the head and shoulders. Head and shoulders, arguably one of the strongest reversal patterns there is. So I take a look at this, and I'm waiting for the break. It pulls up, and sure enough, I get my break, and I get rewarded quite nicely, and I partial all the way through down to what is the low of pre-market. So I selected this 46.53, and I went down to 10% there at 46. Sorry, it's 46.12. Sorry, let me go further out. I was too far zoomed in. It went much further than that. All right, so it got me all the way down here to 46.12. So I had a 10-cent stop out on a previous trade, and on this one, I got down to 46.12, and I carried, of the 1,000 shares, I carried at least 250 of them all the way down to here. And at this point, I was out 10%. I stopped out when it retraced above 46.50. I really thought if it got over that, it was going to bust through and be gone. It actually ended up curling over and breaking down for quite the rip down. But for me, this was already more than my P&L, and I wasn't really willing to give back much more than that. So anyway, I hope this kind of explains how my pattern's working a little bit better for everyone. Basically, when I talk about my neckline breakout strategy, what I'm looking for is something like an ABCD pattern. I'm looking for double tops, double bottoms, the head and shoulders or the inverse of the head and shoulders. And then when it gets near that point, what I'm using is a triangle pattern on top of that in order to judge when the neckline is going to break out. So hopefully maybe some of the more accurate terminology and put in context with some drawing, maybe that'll help everyone kind of grab what I'm doing here just a little bit better. You can see the difference between success and failure. I mean, this one I anticipated I didn't wait, even though I had the double touches, and it failed on me. Didn't get the third touch. So I was, I knew it was going to go further down. It made a classic pattern, put my triangle on top of it to judge my entry, and boom, I'm in, and was quite well rewarded with my daily P&L. So anyway, hopefully everyone's having a great day. I hope everyone's staying green, and I'll talk to everybody tomorrow.